What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 28th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we've got a few main topics to focus on. I'm going to be talking about two key levels that I'm going to be watching and the sense of Bitcoin's price for the end of this correction that are tied to history, and along with that as well, we're going to be focusing in on the growing pains in the real estate market, one of the biggest dominoes, I believe, that could set the U.S. housing market into either a short-term or long-term recession. And last but not least, we're going to have a sponsored review towards the end of the video for Velas blockchain, so I recommend you guys stay around for that. It's going to be really interesting. All right, so let's go ahead and take a look over the market here. As we can see, a lot of cryptocurrencies starting to slowly rebound out of the negative territory we saw over the last few hours as Bitcoin has pushed sideways. But again, no serious trend here at the moment to the upside. It's nice to see altcoins holding quite well. Again, we've been talking about how dominance right now has remained kind of relatively flat and slowly has given altcoins a little bit of ground ever since Bitcoin had its really strong rally over the last few weeks. Market capitalization still down about $100 billion here for the overall market. So again, we're in a nice corrective period. I think we've got a little bit more of a ways to go, but I'm not getting greedy, guys. This is where I start to get a little bit more eager to add in. But we'll go ahead and talk really here, guys, about what I'm looking for in the sense of this correction. Throughout August, this is for me an accumulation month. And I'm going to be talking about two things that I'll be looking for in the sense of indicators where I want to see Bitcoin make contact with in order for me to believe that we've hit the absolute bottom. But again, it's not my final decision. For example, if we started bouncing up today and went above 10,000 again, I probably wouldn't be hesitant to buy in because this might be the bottom here. We might not set new lows. But in the occurrence that we are going to set, what many would see is probably between this low, this low, and this low, a fourth low, or possibly third, whatever you want to label it as, the next low in Bitcoin to a lower level in price, I'm looking for somewhere in regards to two of the indicators that I like to keep an eye on in regards to these cycles. So what are those indicators? Well, one of them is a little bit more of a short-term one. It's on a daily time frame, and that is the 200-day moving average. So we have the 200-day ever since back here in May, starting off from a bottom of around 4,000. All right, it's taking the last 200 days of price averaging it out. It's not an exponential moving average. It's just averaging the close of the last 200 days. We've started to see that this has started to rise up. And along with this, as well as prices start to come down, it seems like there's going to be somewhere in the middle that these might meet. So somewhere in our target range that we've talked about. And you can extend these lines. I've had these drawn for a while. Again, this is the range where I start to feel comfortable buying in to Bitcoin in this case. Like, I feel it's an absolute steal at this point, in my personal opinion. Again, because they're starting to get into the later phases of the 30 to 40% correction territory down here. So I think that as this continues to rise into August, which I think is going in the beginning parts of August to the mid parts of August, this is where we're going to set the final low. In Bitcoin, I think this is where we could get somewhere in this target range, and we might be even able to get it where it makes direct contact. Now, the reason why I believe this is a good indicator is that we saw historically that as we were exiting out of the accumulation phase, this happened multiple times here. We can see here there's multiple times where Bitcoin dropped down. Now, again, that could just be on Bitstamp in this case. But we can also see as well across all exchanges at the time that there was a drop down to the 200-day moving average around $500. So this is what we want to look for. Again, history repeating itself here. It's good to see that we might have a chance to repeat that same price action and get Bitcoin somewhere, depends on how fast it happens, somewhere probably between the upper $7,000 range or the mid $8,000 range. Either way, to me, it's a steal. It's below 5 digits, and we're preparing for the next cycle where we think it's not only going to go to the upper 5-digit range, but possibly all the way up to 100K. Again, that's my more bullish case scenario for the next cycle, but we'll have to see if we can really make it there. Besides the point, though, either way, I see it as being one of the best performing assets, so that's an area that I'm looking for. Now, another very similar indicator that I'm going to be watching and shows historical significance is the 21-week moving average. So as we take a look here back in the past, we can see that yet again, this was a period of time where if price was dipped below the 21-week moving average, this was usually a time to start averaging in. We can see over here, we can see over here, anytime down here as well, starting to ride up on the cycle. And every time we get a correction, we tend to come near 21-week moving average. So I wouldn't wait until you exactly drop below the 21-week, especially if momentum starts to kick in. But as we can see here, that's coming up right around the support range that we saw back here. So I think that we're going to get somewhere in the upper $7,000 or low $8,000 range, worst case scenario, and that's going to be an area where I want to start averaging in. So again, some key levels that we're watching. I think the moving averages do play a major role. People overlook them because they're one of the more broader known indicators, but people always just simply use, I think they use it more on the short term because everyone's always trying to trade these markets. But I would say that not only on the daily time frame, but on the weekly and the monthly, these can be very valuable. As we've talked about in the monthly, I mean, guys, when price was, for example, approaching I think this was the 50 month here, we saw historically that's where price rebounded. And as we were getting down towards 3,000, I talked in my newsletter a lot about how this is a range that we want to look for. When we see price coming back down, we've had the 80% retracement, and we started getting near this level. This was really exciting. Now, again, I think that's obviously become almost irrelevant at this point with how much it's gone up. But again, I think it's a very, very important point to take into account is the moving averages, because it's relevant in pretty much every single market that I know of. All right, guys, so I've rambled on enough. You guys know this is my accumulation zone. I averaged down not only here, but also I think when we had landed in the correction down here around 10,180. So I've added 2 times. I'm going to be adding even more as I'm waiting for cash deposits to get into my exchange account. I want to talk a little bit about something that goes in the sense of the macro picture, guys, and that is what's going on in real estate markets. Now, as you all probably know, I think our general demographics for this channel is mid-20s, mid-30s, and a lot of you out there might be first-time home buyers. You might be renting at the moment, maybe working your first major job out of college, whatever it may be. And this is a really interesting chart here that shows a interesting divergence from the CPI. This is the Consumer Price Index. And it basically shows the general rate of prices over time or inflation that's kind of been built in to the cost of living. And they also have an individual chart here as well that shows the median asking rent in the United States. So what renters are asking from those who are renting. And it's very interesting. You see this huge divergence starting in I would say probably like the early 2000s in this case, right at the start of the century. And you start to see this divergence where rent costs have just ballooned. And I think it speaks to the problem that we've had of rent seekers in the United States, but it speaks to a much broader problem, right? There is free market competition in this case. There should be competition that should bring down these rates. What's been ballooning these rates so much higher? What has been ballooning the price of real estate markets? Because I know not everyone is paying these prices. As much as I love and tout the United States stock market because there is a lot of macro factors that prop it up, I think the U.S. economy, as it's been for the last few decades, has been really pitiful for the average person. So what is propping this up? What's keeping rent so high? Well, foreign purchasers have been one of the biggest driving factors. Gigantic liquidity has come out of China over the last few years that has propped up the Australian, the Canadian, the European, and even US markets in order to flee money from China. Now, I have no problem with that in the sense that, people, for example, want to get money out of a country where they're starting to measure every single factor of your life in a scoring system, but I will say that at the same time, this leads to very big issues for people who live in those economies, because the people who are buying these, the foreigners who are buying these properties, are not technically living there. In some cases, I've heard of crazy stories in Australia where they'll send their kids and they'll get someone to kind of nanny them, and they'll literally be living there as an exchange student. They do all these kind of weird things to get around kind of the laws in this case, a lot of loopholes. But the fact of the matter is they're not really living there. They're fleeing money out of the country, right? And as we started to see here, that might be coming to a close very soon. This is something that I talked actually about a full-on year ago, last summer, as the trade war became a topic of discussion. Right in its early stages, I said the one leverage that China holds is its hold over the real estate market. And this is one thing that, again, China not only has already had an incentive to try to shut down, but along with that is a huge leverage it could have to dent U.S. markets if we push too heavy on, hey, you need to stop violating IP from the United States. We need to balance our trade deficit, whatever it may be. It's one of many topics that doesn't really get covered in kind of the mainstream media that plays a huge role. And as you can see here on CNBC, they actually did a really nice article with some major bullet points here. So foreigners bought over 183,100 properties with a total value of $77.9 billion. Now that was this year. And as much as that sounds like a lot, it's actually a big drop from what we had the previous year, down from 266,800 properties that had $121 billion a year earlier. Isn't that incredible, guys? Huge drop. Over nearly, in this case, almost $50 billion. in the sense of $40 to $50 billion in the sense of properties, and tens of thousands of properties less than the previous year. So what is this? What's happening? Well, China is slowly starting to crack down on this. There's been new government regulation by the Chinese government that has started to censor the ability for capital to flow. And I think more than anything, this speaks to the need of Bitcoin, because I know there are people out there who have used Bitcoin to get money out of countries from oppressive governments. Yeah, Bitcoin can do that. Bitcoin is freedom. It's the ability for you to have sole autonomy over your money. And I think that it's really exciting. I think that's a great thing. But anyways, again, the fact of the matter is that this has been playing a big role in the sense of propping up U.S. markets. And, you know, what we've seen is basically there's the kind of general story of how it works. It was a really interesting post that I saw on Reddit where someone was talking about their experience living in Boston. And Boston, like many cities, has had huge increases in the rental and property prices. And the general thing is that basically what someone will do is they'll say to a real estate manager or someone who's looking to rent out the property, they'll say, hey, I would like to rent your property, or I'd like to buy your property. They give them a call. Next day they get an email. Sorry, we have an investor who has either bought up the property or someone who is currently, picking up the property in this case. Sorry about it. Like, it's basically just like that. If there's shown for demand, the property gets picked up. And it's a really interesting scenario. But again, I think this is going to slowly tether off. And as much as this is going to be good news for people who are trying to be first-time home buyers, we've already started to see prices drop. This is going to be bad in the sense that it's going to show that a lot of the wealth this economy has, both in real estate property and then also eventually as a domino effect into equities and other markets, is a lot of phony wealth. It's been propped up. The capital is drying up. The liquidity is dried up to where this system can't go on much longer. God dang it. Anyways, guys. So the major point here is that what I want to emphasize is that as we start to see asset prices go down, as much as it doesn't benefit the average people on the web, it sure as hell hurts us, because when the underlying economy hasn't been fixed and global liquidity dries up, that means that there's more layoffs. When wealthier individuals tend to see that their wealth isn't as large as they thought, it starts to dent the underlying economy, which is never fun. So anyways, I think you guys should look into this. I think it's very interesting. But until the next video, guys, thank you all so much for watching, and let's go ahead and take a look at our sponsor for today. Alrighty, everyone, so let's go ahead and spend some time to focus in on our sponsor for today's video, and that is no other than Velas Blockchain. Now, before we dive into the in-depth analysis of the project, I know this is probably your first time hearing about Velas Blockchain, so I want to give you guys a quick rundown of what Velas Blockchain is trying to achieve. Now, as you can probably tell here from the kind of brief description that's on the front page of their site, they're aiming to use a combination of two very emerging technologies to fix a very big problem. Not only utilizing blockchain technology, which is integral to a lot of cryptocurrencies we know, but along with that, using artificial intelligence in order to fix what's known as the blockchain dilemma. And to give you guys an easy explanation of what that is, this is something that was brought up by Vitalik back a little while ago, and it's basically where we have a dilemma where we have to sacrifice one of three principles. And the three principles are security, scalability, and decentralization, which are things that I think everyone desires in a network. For example, on Bitcoin and Ethereum, we might have security and some decent form of decentralization, but the problem ends up in the fact that we don't have full-on scalability. We can't process massive throughput. And vice versa, with a lot of altcoins, you might get more scalability, but you're forfeiting security, and you're also forfeiting decentralization in a lot of cases. So Velas is trying to fix this. It's trying to not give in to the blockchain dilemma and utilizing these technologies in an interesting way. So how is Velas not just word salad or kind of utilizing the hype of just artificial intelligence and blockchain? Well, I think a more proper term to actually use outside of just artificial intelligence is that Velas is using artificial intuition. Now, we have to understand a very core element of science, and this video from the founder of the project and stuff was utilized as a way to kind of analyze how Velas aims for its blockchain to operate. So this is a study done by Harvard. It's a gigantic kind of rectangular petri dish, as you guys probably might know. That's where bacteria is basically utilized to grow and to study. But anyways, this football-sized petri dish has different layers of antibiotics in it, starting off from 0 all the way to hundreds of levels higher, which should prevent bacteria from growing. But the thing is that bacteria mutates, and this is a very simple explanation and example of how through the combination of genes that these bacteria can have, that we can continue to see bacteria and other living organisms evolve and become stronger and more resilient. So this video, as you'll start to see, they placed bacteria on both ends, and we can see the bacteria thrives in an environment where there's no antibiotics. But slowly over time, whereas we might think that the bacteria can't continue to spread, it starts to evolve, it mutates. Now again, the bacteria isn't being taught anything, it's working in an autonomous nature. There's no adults that are teaching it, hey, you need to do this in order to get past the antibiotics. It's simply the spreading of their genes through mutations. And over time, we can see that over a multi-day process, bacteria, which originally, most bacteria could not get past the low levels of antibiotics, we get this new strain of mutation that is continuing to spread through heavier and heavier levels of antibiotics. So it's nature at its finest in a very simple and visual form. And actually, I absolutely love the video. It's not only visually beautiful, but it speaks to what Velos is trying to do. Now, there are a lot of technical aspects to Velos blockchain. I probably won't do it justice in this video, guys, in the sense of talking about, on a full scale, how the network reaches consensus. But the first thing that I want to kind of focus in on is the AI-enhanced DPoS, or ADPoS in this case, which is basically how the network is going to be reaching consensus. So in a traditional kind of proof of stake environment, which you guys might be aware of, it's a common way that networks reach consensus, usually off of stakeholding. Velos believes that in a traditional POS environment, in this case, a proof of stake environment, that it's not good to just simply give the network holders, in this case, the holders of the coins or tokens, whatever you want to use as a term, the sole authority to reach consensus, because there's issues like the nothing at stake problem. And also as well, just a theoretical question of whether or not, should it be that a large stakeholder should be able to reach consensus for the network? They might not have the best connectivity. They might not be putting in enough computational resources. They might not be located geographically in order to facilitate transactions in a efficient manner, in this case, to produce high throughput. All these things are things that you have to factor into building an efficient network. And that's what Velos tries to do with ADPoS in this case. By using basically an autonomous system within the network, you're able to basically build a system where different nodes in the network are ranked. The ability to have a node that gets to be basically what will be the equivalent of the next block producer, or those who are going to get to validate and confirm transactions and earn the Velos token. Is going to be ranked through this system, and it's going to be based off a variety of factors that I listed, as I talked about geolocation, how much resources you're putting in, how efficient are you processing transactions, etc. So again, taking into that principle that we talked about earlier, again, a network growing over time and continuing to become more and more efficient. That's the mindset of Velos. And you can get a good summary of this throughout their blue paper, guys. Again, I can't dive through the entire thing. I want to keep it more on the conceptual level here so you guys kind of get an intro understanding of it. But I think the idea is actually quite interesting. At first, again, I was curious. I've seen a lot of AI blockchain projects before, but this to me seems quite interesting. The only thing I'd say is that right now, this is technically, in a sense, theoretical. They're going to be working on the version 1 of the blockchain, which should be coming out relatively soon. They have kind of a roadmap both in their blue paper and their technical paper that talks about how in the first version they're going to be operating about 4 nodes that are running in this autonomous nature. And again, it's starting to confirm and validate transactions, but they hope to scale it over time. And between all kinds of different nodes, people will be able to run their own nodes as well. This is basically going to be a permissionless network where you can step in and contribute. And it's basically, as we saw in the video, it's survival of the fittest. It's basically the best win in this case, and they receive the rewards to make the network most efficient. And they have very high kind of goals of reaching transaction throughputs of 60,000 transactions. I still don't know exactly where they're getting these kind of figures. Again, there's a few things I'm still kind of skeptical about, and I want to learn more about, again, because it's a white paper in this case. You're in the very early days of this concept, but I am interested. One thing that really drew my interest is that there is an individual on the team that I met personally when I was in Dubai, when I went to the, I think I went to, it was the, I'm trying to think of the conference name right now at the moment, but it was a really wonderful conference in Dubai. And I got to meet a lot of interesting people there. Met some crypto YouTubers and individuals in the space, but I met an individual named Joshua Hong. Now, he's not the founder of the project. He's the co-founder at Mind AI, which is another project dealing with building basically a market for decentralized algorithms and focusing on artificial intelligence. However, Joshua gave a wonderful speech there, and I think he's a really fascinating individual. You can read his bio here. I don't think I need to go through it. You can obviously see there's some big names from Accenture to working at Deutsche Bank, a lot of big institutions across the world. And he's just a very bright individual who understands kind of the importance of AI if this continues to scale out as a technology. And I take that as someone who myself, I've been quite skeptical of the kind of higher layers of artificial intelligence, going from where we're at right now to artificial general intelligence, and to the higher levels where, you know, you start to get way out of control of what AI could possibly do. So anyways, as we go through here, guys, they have some good materials you can go through to kind of learn a little bit more about the details. It will take a good read or two to really understand, but they also have some good talks as well from their CEO. Now, I want to go ahead and take a look here at the team. This is Alex Alexandrov, who's not only the founder of the project, but he's also the founder of CoinPayments.com. Now, if you guys aren't aware, you might probably not know about it unless you're a merchant or someone who has to process crypto to fiat transactions or fiat to crypto. Well, Alex is the founder of CoinPayments.com. It's a platform that allows for fiat on-ramps in this case in order for cryptocurrencies of all types. They process, I think it was like 13 or 1400 altcoins. So that's a wide range of ERC20 tokens and individual blockchains, from Bitcoin all the way down to small blockchains like Dogecoin, right? So you've got a whole range of individuals who have experience working in previous companies in the crypto space, predominantly Alex heading up the project. And they've actually decided not to do, and this is the reason why I'm really talking about it, guys, is that they're not doing an IEO, they're not doing an ICO. I think there is some private investment involved in the project, but as a project alone, they're not doing any major raises in this case that they would traditionally do with most projects. They had, I think, originally planned to do it, they decided not to. So it's good to see here. I like that they're going through this route, and not to mention as well, they've got a huge set of onboarding users through the Coin Payments platform, as you're going to be able to use what's known as the Coin Payments token and actually convert that at a 1-to-1 ratio with Velas tokens. So pretty interesting, a good way to kind of onboard a lot of people who may be interested in this idea of using the Velas blockchain that can scale to a high throughput. But again, you can take a look through the team here. They've got some interesting individuals throughout the project. Again, Joshua being one of my favorites. He's a really nice guy, a very big picture guy. I think he just kind of views things in a very macro perspective like I do. But again, I would recommend you guys give it a look. If you get the chance, do your analysis on it, do your own due diligence. I think this is a good starting point. We might talk a little bit more about Velas as time progresses, as more material comes out and as the project continues to develop. But at its concept phase, in summary, my major point I would say is that though I am still kind of, I'm not so much skeptical, I'm eager to learn more. I think that this is much more than just simply combining artificial intelligence and blockchain. I've seen a lot of projects like that in this space, as I have seen with other combinations of technology with blockchain, but I think they've really got something here. And the team's stacked with a lot of individuals who I think will be able to achieve the early stages of the project, and I can't wait to see if this will actually be able to happen in a completely autonomous nature where it's almost kind of uncontrollable. It's just kind of its own system over time and starts to work as it intends to from the get-go. In this case, it's an efficient network to process high throughputs of transactions and actually serve as a valuable blockchain. So that's going to be it for the video today, guys. Thank you all so much for watching. I hope you all are having a fantastic day wherever you are. And if you want to find some more info on the Velas blockchain project, check out the description down below for more info. But until the next video, guys, I thank you all so much for watching, and I'll see you all in the next one. Stay tuned.